information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Your Money, Your Call. I'm Julia Lee from Bell Direct. If you have a question about shares, our phone lines are open and we'd love to hear from you. The number's 1300 30 34 35, or if you prefer, you can always email us on yourmoney@skynews.com.au. And what a day it's been. We've seen the market really on a tear, and the material sector a standout. We saw iron ore prices up by 4.2% overnight to $138.70 US a tonne. Can this run continue? The mining sector has been one area that hasn't been doing so well in 2013. In fact, the material sector, the only area in the red with a loss of 6.9%. So are we going to see a reversal of those fortunes? Joining me in the panel, on the panel tonight, we've got Peter Esho from Invast and also Nick Radge from the Chartist to talk about the market. Welcome to the market. I mean, Nick, starting off with you, the market's been on such a good run. A lot of people are going to be asking themselves, is this the start of something big?
We can only hope. We can only hope. I think a major thing we're seeing this time, which we really haven't seen before, is the small ordinaries have really, as you said, been on a tear, and they've really bounced back strongly over the last 3 or 4 weeks. It's great to see. Any pullback we've had in the last month or so is very, very small, and that's also a very good sign. So, yeah, the fact that we're seeing really good momentum in the small ordinaries gives me a lot of faith that potentially we're going to test all-time highs, or not all-time highs, but recent highs in the broader market as well. So it looks good. Okay,
so looking good. Are there particular sectors that look better than others?
Interesting you say that. The energy sector is really what's coming out on our momentum models at the moment. In fact, my portfolio, I think we're pretty well 50% allocated to various energy type stocks. So there's obviously a lot of strength through there. But after today and yesterday, we're starting to see a lot of other broader sectors coming through. But the one that's really stood out in the last month or two has certainly been the energy sector.
Okay, so the energy space looking good. I mean, Pete, we're in earnings season at the moment. Not a lot of analysts getting sleep or much of a life. What have you made so far?
Look, so far so good, I think. Really the important companies are those of key statistical significance to the index. The likes of Telstra, the likes of Rio Tinto have come out and on balance pleased the market. Stockland came out today, and I know that the market didn't really take that on board as a positive, but it is a stock that had been running up. And if you actually have a look at the commentary, the strategy, there was some positivity in that. I think the outlook statement disappointed slightly, but they're talking about the New South Wales housing market, Western Australia bottoming going into 2014 with 25% more contracts of business in the residential book. So tomorrow's the big test. Commonwealth Bank of Australia comes out tomorrow. I think that's going to be make or break for the financials.
Okay, let's talk about Commonwealth Bank. Just looking at Commonwealth Bank, Nick, and this is a stock that's up 34% over the last 52 weeks. I mean, earnings haven't been growing that much, but we've seen the shares obviously supported by the higher dividend yield compared to the rest of the market. Can this run in Commonwealth Bank, do you think, continue?
I think so. I think so.
Yes?
Interestingly enough, we hold it in 3 of our different portfolios for 3 different reasons. Our longer-term momentum portfolio, the growth portfolio, we're in at around the $51 mark from April last year, so we're still running that. We're testing all-time highs in the Commonwealth Bank. We're also running it in one of our dividend models as well. We've got ex-div coming up in a couple of weeks' time, so we're holding it for that, and also on a discretionary. There's some good pattern structure there as well. So, yeah, I think we're going to see all-time highs, and I think the market's been looking forward to tomorrow's results.
Okay, so looking pretty good for Commonwealth Bank. What are you watching for, Pete?
I'm watching how the market will react to the print. I think I'm still a little bit uneasy about the competition in the residential mortgage market. I hope I'm wrong. But I think that the major banks are now starting to get desperate to write volumes, and I think Commonwealth Bank will come out with a good set of numbers, but it's about banks' earnings going forward. And I just feel, with NAB splashing $1,000 for a new home loan, Westpac moving outside of the interest rate cycle, there is a hint of desperation out there. So I'm just watching that and watching how the market reacts tomorrow. I don't think there's going to be a shocking number, but I think expectations are probably a little bit too high.
Yeah, it could well be.
It's just in the back of my mind. Everybody's expecting perfection. If it's anything short of that.
But even so, I think if there's going to be any negative reaction, it's going to still be reasonably well supported. Maybe not tomorrow, but
That's
on any
right.
weakness with that yield, it's got to be supported.
That's right.
Okay, so Commonwealth Bank, the big one to watch tomorrow. We also hear from CSL as well as Leighton. So Wednesday, the big day of the week for earnings. We do have our first caller on the line. We've got John from Redcliffe on the line. John, welcome. What's your question tonight?
Hello, panel. I'm wondering what you think of Lynas Corporation shares. I bought them a while ago and they haven't been doing much, and they've come online and are started to produce their rare earths, but the prices continue to go south. So what are your thoughts on that stock, please?
I think you've just nailed it, John, on what the problem with Lynas is. I mean, just looking at that share price graph, it's not an attractive looking graph at all. And on one hand, they're looking at ramping up their LAMP, which is their processing plant, but on the other hand, rare earth prices have just absolutely slumped from 2 or 3 years ago. So, Nick, looking at a chart like this, any signs of basing at all?
It's trying to put a base in here at the moment, John, and that's what we want to see. It is sitting below a significant level of resistance at 50 cents. So ideally, we want this base to continue for a little bit longer, and then when we break up through 50 cents, and I think if we can do that, you'd want to add to your position. I think that would look very healthy. There's a lot of these basing patterns going on at the moment. Evolution Mining, Kingsgate, there's a few of them happening, and it's starting to happen here. I'd like to see it go on for a little bit longer, and then if we can break up through 50 cents, I'd add to your position and go for it then. I would be concerned if we start to break down through the bottom of that base. That would be a certain sign that trend is going to continue lower.
Okay, I mean, looking at Lynas and looking at some of the other rare earth miners around the world, and we've seen China's largest rare earth miner not too long ago coming out, cutting revenue forecasts, saying they don't expect to see a recovery in this industry this year. I mean, is that your view? What do you see as a catalyst for Lynas?
Look, I know they're producing, and I know a lot of the uncertainty and the negativity behind the stock you'd assume is now behind it with the fact that they're producing. The actual construction and development of that project is now going into the production phase. But when the market rallies so aggressively, as we have seen over the past few days, and a lot of the smaller mining stocks do run, and a stock like Lynas just sits there and doesn't really move, to me sends a message that there's probably a little bit more to the story. This is not a business that's generating any earnings yet, and earnings are very different to revenue. So I think the market just really wants to be over convinced with Lynas. So I think it is at rock bottom prices, but I don't think you can compare it with Australian producers of commodities that have a little bit more certainty, like iron ore, for example, and that are profitable. So just be wary of that. And I think there's an opportunity cost too, because there are so many other names that are running.
Okay, so I hope that helps you out, John. Let's go to our next caller. We've got Alan on the line from Maitland. Alan, welcome to the show. What's your question for our panel tonight?
Good evening, Julia. Question concerning Tox-Free Solutions, TOX. I notice it's come back a bit in price in the last couple of months or thereabouts. Just wondering what Peter and Nick think of it as regarding a buy at this particular stage.
Sure, so looking at Tox-Free Solutions, I mean, this is an interesting one. I had to do an assignment on this for my master's a few years ago, and it was a great looking stock because, the industrial sector as well as the resource sector, and at the time the resource sector was booming, so looking at, potentially toxic waste and getting out of that was a great market to be in. But of course now the catch cry in the resources space being cost cutting and cutting of capital expenditure. How does this impact on Tox? I mean, the shares have held up fairly well. They're down 4% over the last 3 months, but still up 24% over the past 52 weeks. What do you think, Peter?
This is a business that I really did like about 3 or 4 months ago. Over the past 10 years, their total shareholder returns 35.5% annually over the past 10 years. And over the past year, 3 years, 5 years, and 10 years, it's all positive. But there's something that I don't like in small cap businesses. When they go out and raise money to make acquisitions, that is a little bit of a red flag for me. There haven't been too many instances in the past where businesses, particularly in this space, have successfully gone out and made acquisitions. There's execution risk. Now I know The reasons for those acquisitions are very sensible, and there's a strategy in place. But I just wish they didn't need to do that. I wish there was enough organic growth there. And so I'm probably going to sit on the sideline. It was a business that I really liked, but I'm just not sure if going out and selling a chunk of your business to buy these new acquisitions is the right thing to do.
Okay, so Peter cautious. I mean, just having a look, and I noticed that Morgan Stanley is still overweight on the stock with a $3.80 target. Is it a fast stretch to get to 380, Nick?
It's consolidating at the moment, and we're at the bottom end of that consolidation. So if you're an aggressive trader, you could lean against this support, buy it here, place a protective stop down around the 290, maybe the $3 mark. Look for it to rotate to the upper end of the range, which sits around that $3.60. The safe trade is to wait for it to break $3.60. If we can break through $3.60, it's a good trending stock when it gets going, but we really need to break out of this consolidation. So $3.60 is the level on the upside. Aggressive trader, buy some here and then add to it on the breakout of $3.60 if we get it.
Okay, so some trading tips coming through from Nick. And on that note, we're taking a short break, but we will be back to answer more of your questions. If you'd like to speak with our expert panel, we'd love to hear from you. The number's just on your screen there, 1300 30 34 35, or you can also email us on yourmoney@skynews.com.au.
They don't last 2 days.
Welcome back to the shares edition of Your Money, Your Call. We're still taking your calls. The number's 1300 30 34 35 and your emails at yourmoney@skynews.com.au. And we have Adonis on the line from Melbourne. Adonis, welcome. What's your question tonight for our panel?
Hi, Julia. I'd like a technical view on both Rio and Atlas Iron. They've obviously had a really good run of late, look quite overbought, but still a fair way off off their highs. I'm just wondering, does Nick feel that this momentum, this push-up can be maintained and worth sort of getting now, or would he wait for a retracement and get back in at a more acceptable level?
I mean, a very timely question coming through from Adonis, because these stocks have just been absolutely soaring. Looking at Rio Tinto, in just the last 1 month, up 14%. Yep. And Atlas has doubled that, up 28% in a month. So, Nick, how do you trade something like that?
And I think it's a very good point that is being made. These stocks can move, and when they get moving, you don't want to wait for a dip, because they're not going to dip. There's an old saying from the trading floor of the Sydney Futures Exchange, don't be a dick for a tick. In other words, don't try and save a couple of cents and miss several dollars, because when these ones get going, they really do rip along. So to answer your question, I think AGO looks great. It's had this basing pattern. I've mentioned a couple of them. Looking at this one, it's doing it again. It's sitting right against resistance right here at 106, but that would not stop me from buying it. It's got good momentum behind it. It's coming out of a base. I can't ask for anything any better. There's no guarantee it's going to get on with it, but the market has a sense of a change of sentiment going on at the moment, and I think you really want to be on that. As for Rio, we did buy that a couple of days ago on one of our momentum models. I don't personally like trading Rio myself. I stick to the smaller cap kind of stocks, but it's running, and there's no reason why potentially it couldn't go back up, test the highs at $70 again. But I would stick to the smaller ones that are breaking out of those bigger bases. Okay,
so both of the stocks looking good, but Nick preferring to trade Atlas Iron. I mean, the iron ore space has been such an interesting place. A lot of analysts had been predicting 100 US a tonne for iron ore. Instead, it's close to 140 US a tonne, and we haven't seen that traditional seasonal weakness, where last year in September we saw iron ore prices dipping back to 87 US a tonne. So, I mean, Peter, looking at iron ore, can this continue?
Well, I actually copped a little bit of flack on Twitter this morning because I was so excited about the iron ore price, not just in US dollar terms, but in Australian dollar terms. And that's what really matters for the likes of Atlas Iron, what Australian dollar price they're getting. And the Australian dollar price is now above 150 a tonne when you adjust for the fall in the Australian dollar against the US dollar. And that's a very, very strong historical iron ore price. And that's why we're seeing Atlas, Mount Gibson, Jindalee, for example, bounce off record low levels on very, very strong volume. So I've actually said that I think Atlas is a takeover target. I actually continue to think so. I don't know when, and that's not a technical view. That's a little bit more of a fundamental view, and I think that the environment might be just about right to see several factors taking place. So look, it is not in a net cash position like Mount Gibson, for example, but I think over the long term it has that corporate appeal.
Okay, so iron ore stocks looking very good, and a really good point by Peter that the Aussie dollar is moving in favour of the iron ore miners instead of being a headwind as it has been the last few years. We do have our next caller on the line, and we have Andrew from Brisbane. Andrew, welcome. What's your question tonight for our panel?
Oh, hi, Julia. I'm just ringing up in relation to Horizon Oil. I bought my stock about mid-40s, mid-40 cents, and I think they're about 33, and there's the share offer for 33 cents at the moment. I just want to get everyone's opinion on whether it's worthwhile taking up that offer.
Sure. So we have Horizon Oil. Notice Bank of America Merrill Lynch. They cut to an underperform from a buy and cut their target down 29% to 35 cents. That was on the 1st of August. That was a while ago. And since then, the shares have fallen below that mark. I mean, Horizon Oil, big project in China, the Baby project. They're doing a capital raising though. Nick, looking at the share price action, what would you say?
Yeah, Andrew, it doesn't look particularly promising to me. We did ride it up and exited at 40 cents, and it's now just drifting around in a bit of a range, really, from around this 30 cents up to 42. Not doing a great deal, I guess. If you're an aggressive trader, again, you can lean on this support down here at 30. If it breaks 30, you'd want to get out pretty quick, smart. But I would say best case scenario, rotate to the upper end of the range, which sits around 40, 42 cents, and that's pretty well it for the moment. There's certainly no trendiness going on there. The trend will only resume if we can get up through that 46, 47 cents, and that doesn't look likely at the moment. But potentially a trading proposition right here, leaning against the support, but with a nice tight stop loss on it.
Okay, so not a trendy stock, Horizon Oil. I mean, they're raising $3.5 million, 33 cents a share to fund some of their projects in Papua New Guinea. What do you make of the move?
I don't know the stock, to be honest, Andrew, and it would be unfair for me to sit here and give an exact view on it. You're a holder, and it sounds like you've been there for a while. And one point I will make though is that when these exploration and early stage production businesses do go out and raise large amounts of money, that equity is usually underwritten, and so there are sometimes sellers of the stock of large amounts that are not natural holders of the stock, and that could push the share price down. So you really need to have that patience, and you really need to keep a very close eye on production numbers, and again, there's an opportunity cost. I actually like rock oil in this space. Have a look at the code, keep it into consideration, and know that there's potentially some sellers, institutional sellers there to take profit.
Okay, let's go to our next caller. We've got Bill on the line from Adelaide. Bill, welcome. What's your question tonight for our panel?
Oh, hi, Julia. I'm just interested in a valuation and an opinion on Investra, and also interested in some comments on the merger proposal with APA. And does anyone know what the latest is with that merger? The last I heard was that the board had knocked it back, saying that it wasn't a good enough deal for the Investra shareholders. And also, if the merger lapses or falls over, what does the panel think the effect will be on the share price?
Some good questions coming through from Bill, and I guess looking at Investors, some very attractive pipeline assets, and we know that there's a gas boom in terms of a number of projects in Australia, massive gas projects, and if we have a look at Investra as well as APA, both of them have pipelines which deal in gas, so they're looking at the infrastructure. So if you're interested in this LNG boom, do you go for the infrastructure or do you go for the gas projects? Pete, what do you think? And also valuation on Investra.
Yeah, it's an amazingly attractive piece of infrastructure because it does have a very strong monopoly. It's not very easy to go out and lay that pipeline, and there's huge demand, as Julia said, into the domestic market for the gas. But it is regulated. You have a regulatory risk, and you need to keep that in mind. It's not just a completely free ride on the infrastructure. And so what you've seen in Investra is a very large run-up in the share price on the back of potential corporate activity. So I think it's gone from a bit of a safe, reliable buy for a very nice yield, set and forget type of exposure to traders that are trying to eke out some percent here or there due to a takeover coming through. So it comes down to what type of investor you are. If that corporate activity is pulled, then I think the share price will fall. There could be a rival bid that trumps it. There could be regulatory risks. So I don't think the margin of safety is high enough at the current level. I'll be taking profit. I'll be selling because we've all seen with Macmillan Shakespeare, for example, what regulatory changes can have an impact on share price.
Okay, so looking at Investra, I mean, a takeover offer from APA has been knocked back. I guess the market betting that another offer will come through because certainly we haven't seen much of a dip in terms of the share price. There's other large investors also on the share register, and the stock up 40% over the past year. How do you trade a stock like this, or do you trade a stock like this?
Yeah, it's a very nice trendy stock. You know, we've been in and out over the last 4 years or so as it's trended up. At the moment, we have a bit of a rule when there's a takeover offer. Specifically, if we're holding a position that comes into a takeover situation, we'll hold it for another 2 weeks. And if there is no further offers from other parties, we'll actually exit the position, take the cash and put it elsewhere. So we give it about 2 weeks, and that's predominantly it because, you know, with the takeover, it can sit there for a long time and trade sideways. The one thing with Investor at the moment is lack of liquidity. Now, it popped today to new highs, but it did so on very, very low volume. So I don't think there's a great deal of money behind it, and I think what Pete says, it makes complete sense here. I think you've got to be a little bit cautious. There doesn't look like there's a great deal of volume behind it. So maybe a few little punters out there having a go.
Yeah, not a lot of volume because, you know, the big players have big stakes. You know, we've got APA now with a 33% stake, so there's 1/3 of the volume gone, potential volume gone, and the Singapore group as well, having a large stake as well. So I guess, Pete, if you hold it, do you hold on? How do you play this? Do you
I think you'd only hold this business if you're buying it on a yield perspective. You're saying, okay, this is a very attractive utility that's going to sit there for a very long time. There isn't too much competition, the long-term fundamentals are there, and I'm just happy taking a 7 or an 8% yield. When it starts to get into a story about, you know, will the Singaporeans sell out, what will APA do, what's the regulatory environment like, it just gets a little bit too bubbly for me. So I think you shouldn't be there. Take the profit. There's very nice profit. Nothing wrong with taking a profit in this market.
So up 40% over the last 52 weeks. That's ENV. That's the stock code. We're taking a short break, but we will be back to answer more of your questions in just a moment. If you'd like to speak with our expert panel, please give us a call. The number's 1300 30 34 35. Welcome back to the program. If you have a question about a stock or shares, our phone lines are open, so please give us a call. The number is 1300 30 34 35, or you can also email us on yourmoney@skynews.com.au. And we have Jim calling in from Perth. Jim, welcome. What's your question tonight for our panel?
Yes, good evening. My question's in regards to PAA. It's a biotech company. It's just a technical view. It's tried a few times to crack that 10-cent mark, and it's failed. If we could go, if it does crack 10 cents, and just a basic technical view on PAA. Thanks.
Sure. So technicals are going to go to the technical expert, which is Nick Radge. Prima Biomed, it feels like we've been talking about this stock for decades.
Yeah, it's a popular stock to talk about. Jim, it's stuck in a little bit of a range. You're quite right. I think the level you're talking about is 11 cents. It's popped up there a couple of times and rejected. On the downside, the support is at 9 cents. So we're basically rotating between 9 and 11 cents. If we can break up through 11 cents, then we would expect a run up to recent highs of towards 17 cents. So if it comes back down to 9 again, you could lean against that support, take it from a trading position, but really the safe trade is waiting for a break up through 11.
Okay, so that was Prima Biomed. They're looking at trying to commercialise CVAC, which of course deals with ovarian cancer. The stock code there, PRR. Let's go to our next call. We've got Levi on the line from Melbourne. Levi, welcome. What's your question tonight? Oh, I think we've lost Levi. We might go to an email. We've got an email here from Hans, and Hans writes, "Hi there, what does the panel think about Amore Energy? AJQ is the stock code. They're drilling successfully in northern Queensland at the moment. How do you see gas prices developing in Australia in the coming years? Thanks, Hans in the Sunshine Coast." I mean, that's the thing, East Coast gas prices. This is expected to be a boom area, right, Peter?
Yeah, that's right. What you need to keep in mind with these prospecting businesses, and again, I don't necessarily know the stock too well, I must admit, and so it'll be a disservice to just completely write it off. But what you need to have a look at is the cash balance, the portfolio, and management's track record, because you have a finite amount of cash, and there's so much land out there, and just by looking at this stock, the amount of land they have is huge. We're talking about an area greater than comparable, some states in the United States. So, management track record is very important, and I think what they're going through at the moment is a phase where the market is waiting for some results, and they need to prove that. So I think the next 6 to 12 months will be very important. I think they need to hit something really nice, get the market excited. If they don't, then I think it will just dwindle, and they'll need to continue tapping for equity to continue promising new projects. Dart Energy has been a perfect example of how previously good track record has not translated into superior returns. So that's not always the case, but just be very mindful that the success rate in these types of businesses is usually very, very low.
Okay, and I guess the other big thing is infrastructure. You can have these great projects, but if you've got no way of getting the gas out to the market, that's another thing to be watching. I noticed that this stock is actually currently in talks with APA on infrastructure to get a more Energies gas out from the Northern Territory into both the Northern Territory market as well as the East Coast market. So just watch as those talks develop, because infrastructure, of course, is important. We also want to get a technical view, so let's go to Nick Radge. What do you think of this stock?
Hi, Hans. Yeah, well, we hit good day today, big upside day today on very, very heavy volume, which is always a good sign. Ran straight into resistance at 31 cents. So we've got to overcome this 31 cent mark, and if we can do that on an extended volume, then look for it to run up to 40 cents. But yeah, it's been rotating around that sort of 24 to 30 cent area for a little while now, so I'd like to get up through 31 to get on with it.
Okay, so that was looking at a more energy, interesting proposition, looking at the Northern Territory and shale gas and unconventional gas. Let's go to our next caller. We've got Tony on the line from Victoria. Tony, welcome. What's your question tonight?
Good evening, Julia. Could I ask the panel about two stocks? The first one being Neon Energy and the second one being Northern Star Resources.
Sure, it's two very different stocks, but let's start off with Neon. I guess Neon Energy is all about the exploration potential in Vietnam. So the upside is potentially quite good for a small company like Neon Energy. I know Bell Potter's been quite positive on this stock. They've got a buy speculative rating on the stock with quite a large target, a 62-cent target on the stock. But it's all about Vietnam and, of course, quite a speculative play. Looking at this one, we might go to a technical view first. What do you think, Nick?
Sure. Well, this is one of those energy stocks I was talking about, Julia. I have it in my own portfolio. We bought it recently. It's not doing a great deal since we bought it, but it certainly has broken out of through resistance and is now consolidating above that, and that's always a positive sign. And if we can get up through 36 cents, then that will confirm the trend is on its way again. So I'd be concerned if it broke back down through 28. But if we can get up through 36, I'd add to positions and keep going with that. It starts to look quite good.
Okay, so Tony, that was Neon Energy. We've run out of time on Northern Star, but we might talk about gold stocks when we get back from this short break. So we'll deal with Northern Star after this short break. If you would like to speak with our expert panel, now's the time to give us a call on 1300 30 34 35, or you can also email us at yourmoney@skynews.com.au. Welcome back to the program. Joining me on the panel tonight, we've got the all-star team. We've got Peter Esho from Invast and also Nick Radge from the Chartist. And if you have a question you'd like answered, please give us a call. The number's 1300 30 34 35, or you can also email us on yourmoney@skynews.com.au. Now, before the break, we were asked by Northern Star, and this is quite an interesting gold company. It's been running very hard over the last month, up by 23%. And if we have a look at this particular company, no debt, and they actually pay a dividend yield of 3.9%. The stock went ex-dividend yesterday, but the stock price even higher today. So Nick, having a look at Northern Star, what do you make of it?
Yeah, it looks really good. It's sitting right against resistance here. It's tested resistance 3 times, and this time we've sort of been sitting here consolidating for a week or two, and that's always a very, very good sign. So 90 cents is your level, 91 cents if we can get up through there. I wouldn't be surprised to see it run pretty quickly straight up to 115. The stock trends very, very nicely when it gets going, and it's the kind of stock that I'd like to ride if it did start to trend again. So up through 91, I really like it.
Okay, so looking good from a technical point of view. Pete, looking at this stock, it's all about the Paulson's Gold project. What do you make of this one?
Yeah, it looks good. What we've seen as the gold price was running up is the juniors being neglected, and Newcrest, for example, running really hard. What we're seeing now is the complete opposite. There's a lot of distrust around Newcrest. There's a lot of speculation that they'll have to raise equity because of their gearing. And what the market's doing, it's looking at the emerging producers that have been there for the past few years, doing all the hard work, ramping up their production, building up cash reserves, and saying, well, look, these look really cheap, and bidding them up. And this is one of those businesses. They have, they have cash at disposal. They have a nice cash buffer. I'm also looking at Saracen, SAR. It's also a high-cost producer, still in Western Australia, so same state, different type of geography. But the managing director, for example, has been buying very aggressively on market. And so we're seeing the bottom end, Australian-based, very important, Australian-based gold producers that are in production with infrastructure and don't have debt burdens running really, really hard. And this definitely fits within that basket. All we need to see is the gold price stay where it's at in Australian dollar terms, and I think there is still a little bit more upside.
Okay, and I guess looking at the cash cost, which is all important for a lot of these gold miners, at these lower cash prices, C1 cash cost 680, all-in cash cost of 1,016. They're still making a profit at gold.
Nice. Exactly.
These levels.
Exactly. If you're making 30% on your revenue, it's not a bad business. A lot of retailers out there struggle to make 5%.
Oh yeah, absolutely. Let's go to our next call. We've got Jim on the line from Brisbane. Jim, welcome to the show. What's your question tonight?
Thank you, Julie. Enjoy the program. What does the panel think of Kingsgate, please?
Oh, looking at another gold stock. So looking at Kingsgate, recently they came out with a record production result. Looking at the costs here, they look at a total cash costs in the Chartist project at $686 US an ounce. Of course, recently we've also heard of write-downs to their Australian mine, the Challenger mine. I think it was about $300 million worth of write-downs there. So it looks like Chartist in Thailand, their lower cost mine, and their Australian assets, the higher cost area. Looking at the share price chart of this one, Nick, which one do you prefer, Kingsgate or Northern Star?
I like both of them.
Okay.
Kingsgate has had a lot of damage done to it, but again, we've got this basing pattern going on, and it looks like it's about to break out through that upper side of the base around this 180, 181 level. And hopefully this basing pattern is enough to set the foundation to get the trend going again. It's been a pretty big ride down for holders, and it does trend well. Unfortunately, it's been trending to the downside. So I like both of them. Pete mentioned Saracen before. We bought that today, and these ones are starting to move. So Kingsgate, yeah, it looks okay to me. I think it looks great.
Okay, lucky Kingsgate. And how about you, Peter?
Yeah, the only thing with Kingsgate is that there's a little bit of distrust around all the promises with management and the way the share price has performed, and then the write-downs right at the bottom. So there's that distrust, and because they have those offshore assets, they're perhaps in a separate basket to the Australia-only gold producers. That's not to say that it's not, it doesn't have good prospects, but what I would watch as a catalyst for Kingsgate is some substantial shareholder movements. Watch the substantial shareholder movements very, very closely. I think if you start to see institutional investors getting on board, the register's quite open. So if you start to see a little bit of substantial shareholder change, that's usually a sign that the funds management, the institutional types of investors are convinced that this is cheap, and then it will sustain that type of technical action that we just spoke about.
Okay, so that was Kingsgate Consolidated. So a couple of gold stocks that we've been talking about there, Northern Star, NST, and Kingsgate KCN. Let's go to our next call. We've got Brian on the line from the Gold Coast. Brian, how are you doing?
Oh, good evening, Julie and panel. I've got two stocks that I'm looking to add to my position in, and they're Seven West Media and Seymour White Limited. I'd appreciate the panel's view on those.
Sure. So having a look first at Seven West Media, and recently there's been a change in terms of the CEO. Seven has had some good momentum, although the printing business is still probably quite a difficult area there. Peter, what do you make of Seven West Media?
I own Seven West Media. It's been one of the better performers in my portfolio. I also own 10, and I know sentiment has been completely against 10 and with 7 West, but as a viewer, if you have a look at what 10's been doing in terms of their programming, I think there's a significant shift there. And so if you're trying to look for something that's a little bit more, has a little bit more upside in terms of optionality and value, I think 10 is the way to go relative to 7 West Media. If you don't want to bother with 10 because you think it's a lost cause, then stick with 7 West Media. The dividend is still quite healthy. They are the premier brand, particularly in the television space. They're earning, in terms of the operating level, about $500 million. And the CEO called a bottom to the advertising market only a few months ago. So this is, I think in terms of quality, it's a little bit higher, but it has run hard. So if you want a little bit more value, just have a look at 10 and where 10's share price is, their programming and the momentum that's coming back.
Nick, would you agree with that?
Yeah, I bought 7 West myself just 3 days ago. So maybe we've both got them, we've got to sell them now. It's broken through a little bit of resistance. It's got momentum behind it, which is what's got us into a brine. There is a little bit of resistance above at 260. Certainly that would be a confidence boost if we can get up through that. But yeah, look, I hold that, bought it 3 or 4 days ago. Happy to go with that. Seymour White, do we have time to look at Seymour White?
Looking at an engineering company there, but an engineering company that's been doing relatively well. I mean, they focus on major roadworks, bridge work, and their order book just surpassed $250 million with a new contract, so not looking too bad in terms of the underlying business. In terms of the share price, Nick? Yeah,
difficult with this one, Brian. Very, very liquid kind of stock on the charts there. It is running against the resistance here at 125, 126. Looks like it's going to break up through that, so it does look positive, and wouldn't be surprised to see it run a little bit high, but very, very liquid. It's not one that we actually watch or would take part in.
Okay, on that note, we're taking a short break, but we will be back to answer more of your questions in just a moment. Welcome back to the show. If you have a question you'd like answered, we'd love to hear from you. The number's 1300 30 34 35, or you can also email us at yourmoney@skynews.com.au. And we've got Joe on the line from Melbourne. Joe, welcome. What's your question tonight?
West Desert, WDR.
Sure, WDR. So looking at West Desert Resources, share price doesn't look too crash hot. I believe they're in the Northern Territory. I think they look at things like copper, other base metals. Just looking at the stock price chart, Nick, and what are your thoughts around Western Desert?
Joe, there's a big line of support here at 60 cents. We've tested down around this way 1, 2, 3, 4, 5, about 7 or 8 times. We've come down again. Every time it comes down to 60 cents, it has a nice good bounce. I'm not saying it's going to happen this time, but if you want to take an aggressive position, you can lean against this support right here, place a protective stop just a little bit below 55, 50 cents, something like that, and look for a bounce back up to the top end of the range. The immediate resistance is around 84, 85 cents. If you get lucky, perhaps up towards 105, 110 at the most. But generally, this area has held, so I would be concerned if we broke down through there, especially on higher volume.
Okay, so, I mean, an interesting stock. They also deal in iron ore, but we haven't really seen an uptick in terms of share prices. No. And there's been a lot of speculation that Noble Group, one of the largest resource companies in the world, could be mulling a bid for this particular company. I mean, that really hit the wires more in July, but the share price hasn't held up. What do you think, Pete?
Joe, they raised, I don't know the stock, so unfortunately I can't help you too much on the fundamentals, but what I can tell you is they raised about $14.5 million at 55 cents not too long ago, and I think that stock is still working its way in the market. If you had the privilege of being in on that and you got shares at 55 cents, then you'd basically take whatever profit you can by just selling on market. So I think, once that washes through, maybe there's a little bit more of a fundamental story. But just keep in the back of your mind, every time these mining companies go out and raise at a very large discount, it usually means that there's going to be people that aren't natural buyers taking the stock up and then selling in market and ramping down the share price.
Okay, so let's go to our next caller. I've got Craig on the line from Brisbane. The calls are coming in thick and fast. What's your question tonight for our panel, Craig?
Hello, panel.
Hi.
Julia, probably one of your bells. I think PAB Parties is a cancer stock with melanoma. They seem to be kicking a few goals. I bought around 3. They're good announcements the last few days. Sure. And also Grange, GRR, bought them on the break at 21, just iron ore stock. I'm pretty sure they pay a 1 cent unfranked divvy, and they are producing, so it's one of the better stories here. They've got a bit of 130 million cash. Just thoughts on charts and fundamentals. Thanks, panel.
Okay, so I won't spend too much time on PAB pictures. That's because it's only got an $18 million market capitalisation. So not a huge stock by any means. Look, it's a Melbourne-based company which looks at natural human antibodies for the treatment of cancer. And I guess since their initial public offering in 2007, they've really been underperforming the market. And one of their problems have been trying to get some sort of scale in this market. So it's missed expectations, development pipelines, but there's now good leadership. So potentially this could be an interesting one, but once again a speculative play in that biotech sector and not a lot of volume that goes through, only $18 million. So let's not spend too much time on that one. Let's look instead at Grange Resources. I mean, iron ore has been moving along very well. Grange Resource, I think, looks at iron ore pellets, which are higher quality but also more expensive to mine. Pete, looking at Grange, what do you think?
Yeah, in Tassie too. Look, just as an aside, we're getting a lot of calls about smaller companies, and I think that might be a sign that the market's starting to turn. Absolutely. When people start to talk about these smaller businesses, it's usually a sign that there's a little bit more risk tolerance out there. So thanks for the calls. Grange is in that basket of the discarded, completely discarded iron ore producers. It is quite unique in terms of its geography and the type of commodity, but I think it's going to continue to move up. I'm not sure how good the technicals look based on the price action, but I think it can vaguely be in that whole basket of the iron ore stocks.
I'm going to take a shot in the dark and say the technicals look great.
I bought it yesterday. It looks super good.
Oh, there you go.
It's this is $5 stock right here. I know valuations.
20 bagger.
It has no debt. They're looking at 2.4 million ounces, getting that run rate up by the end of the year. And most importantly, the iron ore price.
Is that all good?
The iron ore price is looking good.
No debt, that's good?
Yeah,
okay.
no good.
Let's buy it.
That's good.
Yeah, it's broken out of that range. I seriously did buy it yesterday. We get a good increase in volume. Nice range breakout there, so looking for it to continue to run higher towards that 37, 38 cents. There's resistance up at 40 cents. But again, it's a stock that trends very, very nicely when it gets going, so I don't want to be left behind, and I hopped on board yesterday.
Okay, so Nick's buying the stock. Grange Resources is an interesting one because it is high quality, which means when the iron ore price falls, Grange usually gets absolutely hammered because the cost of production is usually greater than other iron ore miners. But of course, when the iron ore price rises, it means that it is profitable at these higher prices. So we usually see a big jump in Grange Resources. So GRR. Let's go to our next caller. We've got Ian on the line from Sydney. Ian, welcome. What's your question tonight for our panel?
I'd like to ask the panel about Alumina shares, which I've held for some time, and they're not doing very much at all, not going up, not going down, and not paying a dividend, yet they've got a world-class aluminium producing facility.
So, yeah, very good point. Alumina's an interesting one. Just having a look at a few brokers and some movements they've made in their recommendation. Macquarie cutting to an underperformed target lower to 95 cents. JP Morgan, though, upgrading from underweight to a neutral and raising their target 20% to $1.20. So no agreement there. Peter, what do you think?
I like it a lot, but you have to be patient. I think if you want a very good glimpse into the strategic attractiveness of this business, and it's really around the replacement cost of their assets and the excess capacity that's been pumped into the market over the past decade or so, mainly from the Chinese, and there's a lot of discussion around what Alumina's assets or equity in assets are actually worth. Have a look at the presentation that they made in Barcelona maybe a couple of months ago now, and it really does highlight where their assets are, the amount of capacity that's flooded through, and where they think, more importantly, that's going in the next 5 years or so. So you really need to be patient on this, but I think if you have that 5 or 10 year time horizon, you will do well, particularly at current levels. Okay,
so Peter liking Alumina. How about you, Nick?
Yeah, Ian, you're quite right. I mean, it has been very, very quiet stock, but on a positive with that, one thing we look for is a contraction in volatility, and that's what you're getting now, because Generally, you get a contraction in volatility, then you get an explosion in volatility, contraction, expansion. So with this contraction, you can expect to see some kind of good solid move, hopefully up. But, you know, with the rest of the market starting to move in that direction, odds on it's probably going to be up. So, yeah, it's a little bit frustrating spinning the wheels, but this contraction in volatility is a very, very good thing as far as I'm concerned. So, you know, if we can get up through that sort of 112, 113 area, it might run up towards 140 again.
So, Nick, how do you measure that contraction in volatility? Do you use Bollinger Bands?
Yeah, the easiest way to measure it is Bollinger Bands. That's the easiest way to do it, or it's a standard deviation of recent price action.
I'll just make one point very, very quickly. The one grievance I have is the amount of money management pay themselves for basically having an equity interest in another business. So I think they have that to address on the governance front.
On that note, time for a short break. We'll be back with more of your calls in just a moment. If you'd like to speak with our panel, please give us a call on 1300 30 40. I've forgotten the number. 1300 30 34 35. Welcome back to the program. This is our last segment for the night, so let's get straight into it. We've got an email here from Peter from Adelaide, and the email is around Xero. XRO is the stock code. So the stock's been running quite hard since the IPO. What do the panel make of this one? Is it too late to get in on this story? Let's have a look at Xero. I mean, trying to get the stock price chart up, and if we can bring up this stock chart, it's an amazing looking graph, isn't it, Nick? Is it too late?
I've not heard of this one before, and that's a phenomenal looking chart. And the reason why I haven't heard it just doesn't trade any volume. So I'm not sure whether it's held very closely, has a small float or what, but certainly has trended very, very well. The one thing I do note with the stock is that when it does have a few down days, they're pretty nasty. You can see the stock drops 25–30% in a couple of days, then recovers, but looks like a pretty volatile ride. And again, that would be from lack of liquidity. So we just don't play with these kinds of stocks for that exact reason, because the day you need to get out in a hurry, you're going to be panicking out.
I mean, it's an amazing ride. This stock just IPO'd last year. It hasn't been on the market for too long. It already has a market capitalisation of $1.7 billion.
That's right.
Pete, what do you make of this business?
Well, I think those that use it are very excited about the technology. It's basically cloud-based accounting software, and it's the ex-MYOB guys behind it, and there's private equity there, and what they're really trying to do is say, look, we're a cloud-based business, and you should really compare us to the cloud-based businesses in the United States, and we deserve this type of valuation. And they're trading on multiples of where Xero is. But we are in Australia, and you're paying Australian dollars. So at the end of the day, you need to realise that there are other opportunities. Some of the opportunities that I like in the IT space, RFL, for example, Rubik Financial. I think it's a fantastic business.
Why do you like that
It's still quite small. It has a very nice niche. They've been making acquisitions in the wealth management space, in terms of online banking, in terms of a lot of financial institution online solutions. They're there. Empired, EPD, is actually an IT business that is also about 55% of their business is doing work for materials and energy companies, and they provide some very nice solutions to help mining companies with their IT solutions, and more recently their cloud-based solutions. So there is an Aussie IT space emerging outside of Xero and Seek and real estate, and you know, they're just two names that I like.
Okay, so lots of ideas from Peter. I mean, Nick, looking at a lot of the trading ideas that have come up tonight, and a lot of them are in the material space. Is this where a lot of the buy signals are coming from at the moment?
Yeah, over the last month or so, I've gone from 85% cash to now fully invested, all in that small cap area. And that's a function that area is moving. As I said right at the start of the show, it seems to be the energy stocks started to get going. It now looks like the gold stocks are starting to get going. What we do tend to see after big major corrective movements such as the GFC, when confidence comes back into the market, people tend to go to the high street names like the Woolworths, where they actually see a business right there. And once the confidence comes in and sentiment increases, then they tend to go further out the curve. And I think we're finally starting to see that part of the market move. The small ordinaries has been in an absolute wasteland for 4 years, and it's had a good couple of months, or a good month, and it looks like it's potentially going to follow through. So it could be very exciting times for the next 6-7 months.
And so that's a really good sign for the market. Nick, with a good point that we've moved from a lot of the large cap stocks running hard to some of the smaller cap stocks, and that's a sign that, you know, the market, instead of focusing in on risk, is focusing more on return, and that's a positive sign for the Aussie market. Remember, tomorrow's a big day. Wednesday, CBA as well as CSL and Leighton's all reporting their earnings, so keep an eye on that. On that note, it's been a lot of fun, but that's all we have time for today. Thanks so much to our guests, Peter Esho from Invast and also Nick Radge from the Chartist. And to you, our viewers, for all your calls and your emails tonight, thank you very much. Until next time, I'm Julia Lee from Bell Direct. Have a fantastic night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.